Hey everyone, hope you're having a great day. So today I thought we would look at moving averages. Moving average is a very popular indicator. You're going to see these pretty much plotted on any chart you see that somebody's going to share online. So first we'll add a few of those. First we're going to do the simple moving average, which is probably the most basic. And what this is, so it's calculate at the close price, and this is the 9 period or the 9 day. Because I'm using a 1 minute chart here, it's looking at the last 9 periods or 9 candles. And all this is going to do is just show us the average price over the last 9 candles. So over the last 9 candles, our average price is $595.21. So one way to trade moving averages, pretty much if you're above the moving average, if price is above it, you're bullish. If price is below it, you're bearish. That's a real simple way to trade that. You'll also notice that sometimes the moving average sometimes acts as a support as we're going up. It'll bounce off of it. You know, you'll have some breakthroughs there. Broke through here, and once it broke through, then acted as a resistance right here until it eventually broke back through it again. But that is the simple moving average. Another popular moving average is going to be the exponential moving average. And the moving average exponential is very similar to the simple, except for the exponential is actually going to apply more weight to the most recent price. So it's actually going to react to price movement a little bit faster. And actually, let's change the color of that so we can actually see which one it is. So it's going to be the purple color now. So now we can see that the purple one is actually reacting to price a little bit quicker here than the light blue or the cayenne color. And that's just how the exponential works. It's going to react to price just a little bit faster. Do note that as you extend your exponential, the look back period of that, as you go up higher, it's not going to apply as much weight up front to the price action. So once you go up to like 100 or 200 day on the exponential, it's going to be very, very close to the simple as far as how it's going to apply that weight. Shorter time periods is going to apply more weight to the most recent price. Hopefully that made sense. Something else that we can do, and I'm going to remove both of these for now, is we'll just type in moving average 2 lines. Or just move average. And this is the one actually I like to use. What this is going to do is actually going to plot 2 moving averages of different lengths. I'm just going to leave this at the 9 and 18 for now, but we can change this. You can change how it is plotted as far as we're plotting off the close price. I leave that. Right here, you can change this from simple to exponential. Hull is also another great one that you should look into. We'll actually look at that here in a moment, in just a second. Also, you can change the color of the fast and the slow average, and you'll notice it already has that changed for us. So I'm going to hit OK and apply. And now we have a 9 period that is plotted in the cayenne color, and then the magenta color is the 18 period. So we have a slower average and a faster average. And so this is going to show you basically the shorter term trend as far as the longer term trend. And one other thing we can note here is that once you start using different time periods, you'll get something that people refer to as a golden cross or a death cross. The golden cross is when the short period crosses above the 9 period. So that is seen right here. Our short period crossed above the 9 period. That is what is called a golden cross. And then you'll also hear another term called a death cross, and that is when the short period crosses below the 9 period. That is considered the death cross. And normally the golden cross is considered a real bullish signal to many, and the death cross is considered the bearish signal. I think primarily they use this for like the 50 and the 200 period moving averages, but you can apply it to any of them. Another way to trade this is pretty much if your short term is above the long term, you're bullish. If the short term is below the long term, you're bearish. That's another way to trade those moving averages. And lastly, I'm going to show you the whole moving average. So this moving average actually is really fast. So it's actually plotting a 20 period, which is actually slower than our 18 period on our moving average 2 lines, which is the simple. And we're actually going to change the color because this moving average actually changes color as it goes up or down. For down, we're going to choose red. For up, I will choose green. So now as this moving average is plotting up, it will turn green. And once it starts plotting down, it will turn red. So that's a real easy way to tell what the direction of the trend is. And we can see it turns red right here as the market goes down. It turns green immediately right here as the market goes back up. So that's another great moving average to use. It's really smooth and it's really fast how it is plotted. But feel free to post up the moving average strategies that you use or you trade with. I'd like to hear those. Just post those in the comments. But anyway, thanks for watching. Have a great day and bye.